Today, I'll be speaking to an experienced Portuguese tax advisor who will help me answer some common questions about Portuguese taxes. Hi everyone, I'm Samantha North and welcome to Digital Emigre. Here you'll find news and guidance on moving to EU countries, getting residency as a remote worker, online entrepreneur or investor, and applying for EU citizenship. If you're interested in emigrating to the EU and becoming an EU citizen, do subscribe to this channel and hit the bell to be notified whenever I release a new video.
So the moment they become to be a tax resident in Portugal is the moment they are liable to pay taxes in Portugal. Is the moment they communicate to the tax authorities a Portuguese address. So they will have to rent or own a property in Portugal. So from the moment that they give to the tax authorities, they communicate to the Portuguese tax authorities that Portuguese address, they start to become considered as a Portuguese tax resident in Portugal. As I told in the previous question, if they are already considered as a Portuguese tax resident in Portugal, they are already liable to pay taxes in Portugal for all their income. So the tax there we have to see if it is considered as a foreign source income or a Portuguese source income. We have a convention signed between Portugal and UK, so we have to see what the tax treaty, what the convention says, and in order to determine if that work is considered of a source in UK source, or with a Portuguese source. If it is considered as a Portuguese source, it will be taxed here under a 20% tax rate if it is considered a high value activity, and assuming that that person submit and ask for the NHR regime. The NHR is a tax regime that the Portuguese tax authorities gives to Portuguese tax residents that they weren't a Portuguese tax resident in the previous 5 years. So the individual has to become a Portuguese tax resident, and then they can submit an application to be considered as a Portuguese, a non-habitual Portuguese resident. So that regime gives some benefits, some tax exemptions. For example, gives a lot of exemptions for foreign source incomes, given exemptions to Portuguese source income related to work, self-employment or employment income, but in that case has to be related to a high value activity. Okay. We have a list of some professions, of some activities that are considered as a high value activity. So assuming that that person that works for an UK limited company is a Portuguese tax resident, and assuming that he had submit for the NHR tax regime, we have to see the tax convention between Portugal and UK. So if it is considered to be in Portugal, he will be subject to a reduced tax rate of 20% under a high value activity. If it is considered to be performed in the UK, he will not be subject in Portugal to any tax, but he will have to be subject to tax in the UK. Okay. I mean, the tax authorities require the effective taxation in the source country in order to exempt that income here in Portugal.
Okay, and that could be a very small amount of tax in the UK, but it has to be some amount, is that right?
Yeah. The tax authorities doesn't care of the tax rate applicable. It could be 5%, 10%, 40%, it doesn't matter. We have to show to the tax authorities that that income was subject to the respective tax rate applicable in that country. It's mainly regarding dividends, because salary, we have a general rule that is applicable for all the countries. Employment income for foreign source, it has always to be taxed in the source country. So if you are in a country that doesn't tax that employment income, you will be taxed here in Portugal at normal progressive tax rates, between 14%, 40.5% up to 48%.
Okay, and this situation is probably best avoided, if you can. So actually, my understanding would be for a person with their own UK limited company, it's better to take as much as possible in dividends, right, rather than a director's salary.
I don't know which withholding tax that is applicable in the UK for employment income in this case, but dividends is always a good way to avoid taxation, because we don't tax dividends here in Portugal, and if the dividends are taxed in the source country, usually they have to be taxed under the limit established in the tax treaties between the Portugal and the respective country, and usually the tax rates is around 10 and 50%, so which is good if the country has withholding tax. Usually, in the point of view of the employee, is what I told you before. We have to see the tax treaty, and the work is performed here on the UK. Regarding the company, we have to see also the tax treaty. We have to see the definition that they give to permanent establishment, because the problem is if a company has a person working for that company here in Portugal, and for example have some right to act in the name of the company, is sign managing acts or contracts or decisions, something like that from Portugal, the company could be the risk of being considering to have a permanent establishment here in Portugal. So in that way it could be taxed here in Portugal. But again, we have to see we have to analyze the convention between signed between Portugal and UK, or the respective country, to see exactly how they determine the permanent establishment in order to advise the company to avoid to be considered to have a permanent establishment here. For example, not to sign any contracts here, and there's some ways to avoid to be considered to have a permanent establishment here.
Okay, so if the person was just an employee and had no managerial responsibilities, then it's okay.
In general terms, I would say that the company would have no problems at all.
Yeah.
The person would have to pay taxes, but the company no.
Usually.
Social Security in Portugal is only due when you receive self-employment or employment income in Portugal. So if a person comes to Portugal and only receive, for example, passive income, doesn't have to pay any Social Security. If he receives employment income or self-employment income for Portuguese source, it will have to pay Social Security. It will have, for example, 1 year, it will be 1 year exempt from payments, and we have to see if that person has also some employment or self-employment in other country, to see if they pay Social Security in other country, because we have some treaties with other countries, especially EU countries, in order to see if it could be a way to pay in one or other country. So again, we have to see the situation, the individual situation. So first of all, under the NHR, if they start to work for a Portuguese company, they will be taxed here. It will be considered as a Portuguese source of income, so they will be taxed here in Portugal. If it is a high value activity, they will be taxed at a special tax rate of 20%. If it is not a high value activity, they will be taxed at the progressive tax rates, the general tax rates up to 48%. If it is if they are not a non-habitual resident, they will be taxed as a normal resident here in Portugal, and they will be taxed under the progressive tax rates. It doesn't matter if it is a high value activity or not, they will be taxed up to 48%.
So it's really important to get the NHR if
it's
at all
very
possible.
important.
Yeah.
If they have a high value activity.
Status.
Usually they provide the contract that they have with the companies. Even if they are self-employment workers, they usually have some kind of a contract or some kind of a request of their services, and the invoices or the receipts that they issue to the companies, and with the description of the services they provided. This is the first thing that tax authorities usually ask, because today it is almost automatically to give you the high value activity. You just inform the tax authorities that you have a high value activity, so they believe you, and when you submit a tax return, when the person submits a tax return, it's that the moment that tax authorities can ask for a proof of that high value activity. So usually a contract, a receipt or an invoice for the work they performed, a CV.
Anything about educational qualifications?
Yeah.
Yeah.
But
Okay.
first of all, they like to see the relation between the amount they receive from that company with the activity. So first, they don't want to go to the education, because the person can have a CV of software engineer, for example, and that person may provide another service completely different that they aren't on the list. So usually first of all they ask for the contract or the specification of the services with that company. Now the foreign pensions under the NHR regime are subject to 10% tax rate. Until last year were tax exempt. So the persons who had already the NHR regime will benefit until the end from the tax exemption, because the regime it will not change even if the law changes. When you submit for the NHR regime and the tax authorities gives you that regime, even if the law changes, the person will not be subject to that changes. So the persons who had already the NHR regime until last year will continue to benefit the tax exemption.
Okay.
The individual who will submit from 2020, more or less, from now on, will be subject to a 10% tax rate. Usually the income, we have to see it if it is considered in the source country as capital gains or dividends, interests, how that income is qualified in the source country. If it is qualified, for example, as capital gains, they will be taxed here in Portugal at a 28% tax rate. If it is considered as interests, for example, they will not be taxed here, even if they aren't taxed in the UK. So we have to see how they are qualified in the country of source.
Okay. Yeah, it seems that in a lot of these situations, it depends on the individual case, right? So
most of them, yes. We usually advise to be very careful, because it could be a little difference. It could mean a lot.
Yeah.
A difference of a considerable tax rate, a percentage applicable. So usually we advise to consult a tax expert to be sure how they will be taxed. We are speaking of a program of 10 years, so it's very serious, and we can find a way to advise the client to at least to be sure how they will be taxed for 10 years. So we have to see the tax convention, we have to analyze the income, we have to be sure how the income is qualified in the source country. It's not so easy to answer in general terms.
Yeah.
Each case is a case, and we advise to be very careful, because it's 10 years and it's not good to suddenly to have a bad surprise from the tax authorities when a person is counting, this income, it's not subject. I read somewhere that income is not taxed, and suddenly they receive an assessment from the Portuguese tax authorities, and it's not.
No one wants a bad surprise from the tax authorities, do they, in any country?
Yes.
So, okay, that's great. And so for new D7 applicants, do you offer like a strategic tax planning service at the beginning for them?
Yes.
Yeah.
Usually we work with the immigration department.
Yeah.
And we start advise them how to do the things, or from the beginning.
Excellent.
It's the better way.
Yeah, no, absolutely. Very, very wise move, I think.
Yeah.
Well, that's all the questions, Sophia. Thank you very much for taking the time. I'm going to put the contact information below the video, so if anyone wants to contact you, they can get in touch and arrange consultations to go along with their D7.
Okay,
petition.
great.
Okay, so thank you.
Thank you.
So I hope you found this video useful in clarifying some common questions about taxation in Portugal. If you've got any other questions, feel free just to drop them in the comments section below. And if you enjoyed this video, don't forget to hit the like button and subscribe to my channel. Thank you for watching, and see you next time.